Did you know that by 2024, China's population will have declined by approximately 1.5%? That's nearly 21 million people. It's a stunning fact that has set the world abuzz. This isn't a simple case of population decline. It's a seismic demographic shift that alters the very fabric of a country's economic and social landscape. Imagine for a moment a bustling city, a vibrant economy, suddenly finding itself grappling with a shrinking workforce and a ballooning elderly population. The implications are vast and complex. From the strain on social security systems to a potential stagnation in innovation and productivity, the ripple effects of this shift will be felt far and wide. But this isn't a tale of doom and gloom. It's a wake-up call, an opportunity for us to understand the implications of such a demographic shift and to navigate the challenges it presents. This is just the beginning of a complex and far-reaching economic phenomenon. China's economic and population collapse didn't happen overnight. It was a slow burn, a ticking time bomb. This behemoth of a nation, once the world's second-largest economy, started showing signs of a slowdown long before the collapse. The first signs of trouble were in the economy. For years, China had been enjoying a booming GDP growth, but then it started to slow down. The juggernaut seemed to be losing momentum, but that wasn't all. The nation's debt was rising at an alarming rate. The dragon was getting in over its head, borrowing more and more to keep the economic machinery running. Then, there was the shrinking labor force. The one-child policy, implemented in the late 70s, had been a double-edged sword. On the one hand, it helped control the population explosion. On the other, it created a demographic time bomb. China was getting old, fast. The labor force that had once been the backbone of its industrial growth was now shrinking. The pool of young, productive workers was drying up. The one-child policy also had another unintended consequence. It skewed the gender ratio. There were significantly more men than women, which led to social issues and further impacted the population growth. The early signs of economic collapse were there, visible to those who cared to look. The slowing GDP growth, the rise in debt, the shrinking labor force, these were all red flags. But many chose to ignore them, blinded by the dazzle of China's economic miracle. The long-term impact of the one-child policy on the population was also evident. A rapidly aging population, a skewed gender ratio, a shrinking labor force. These were not signs of a healthy, sustainable population. The signs were there, but the magnitude of the impending collapse was vastly underestimated. The seeds of decline had been sown, and the harvest was going to be bitter. As the world's second-largest economy, China's collapse didn't just affect its citizens, it sent shockwaves across the globe. Imagine a row of dominoes, intricately set and carefully balanced. Now picture one domino larger than the rest toppling over. This is the domino effect of China's economic collapse. The stock markets worldwide felt the tremor almost instantly. The Dow Jones, Nikkei, FTSE all saw significant drops. The financial institutions, investors and businesses that had placed their faith and funds in the Chinese market were left scrambling. This wasn't just a blip on the radar, it was a seismic shift that rocked the very foundations of global finance. Trade relations also took a massive hit. China, the global manufacturing hub, suddenly became an unstable partner. Countries heavily reliant on China for trade, such as Australia, found themselves in a precarious position. The Australian economy, which had been buoyed by China's demand for its raw materials, was suddenly left high and dry. It wasn't just the developed nations that felt the pinch. Many African countries, which had seen Chinese investment as a lifeline, also faced the brunt. China's Belt and Road Initiative had been pumping billions into infrastructure projects across the continent. But with the collapse, these funds dried up. The ripple effect of this was felt in every sector, from construction to retail, leaving countless jobless and economies in disarray. But the domino effect didn't stop at the economy, it seeped into the political arena as well. China's influence had been growing steadily over the years. Its collapse left a power vacuum that many were eager to fill, leading to a new wave of geopolitical tensions. As we delve deeper into the aftermath, it's clear that the domino effect of China's collapse reached far beyond its borders. It touched every corner of the globe, affecting economies, lives, and even the balance of power. No country was immune to the repercussions of China's collapse. Behind the economic numbers and percentages, there's a human story, a story of millions of lives disrupted. A collapse of this magnitude doesn't just mean falling stocks and shrinking GDPs, it's a seismic shift that shakes the very fabric of society, reaching into the homes and lives of everyday people. Imagine the bustling streets of Beijing or Shanghai, teeming with life, with dreams, with ambitions. Now picture those dreams deferred, those ambitions thwarted. With the collapse of the economy, unemployment skyrockets and people are left grappling with uncertainty and despair. The job market becomes a battlefield, a survival of the fittest, where only the most tenacious or fortunate can secure a means to provide for their families. And it's not just about jobs. The strain on social services is immense. Healthcare, education, public transportation, all these facets of society that we often take for granted, buckle under the pressure. Hospitals struggle to provide care with limited resources, schools grapple with overcrowded classrooms, and public transit systems groan under the weight of increased demand. But people are resilient, they adapt, they seek out better opportunities. And so, we see an exodus, an emigration wave that sees millions of Chinese citizens leaving their homeland in search of greener pastures. This is more than just a loss of population, it's a brain drain. The country loses its best and brightest, the innovators, the thinkers, the doers, who could have been instrumental in rebuilding the nation. Yet, amidst this exodus, many remain. Those who, for reasons of family, of love, of sheer determination, choose to weather the storm. Their struggle, their resilience, their hope in the face of adversity, forms the beating heart of this human story. The economic collapse was not just a financial crisis, but a human one. It's a tale of disruption, of struggle, of resilience. And as we move forward, it's crucial to remember that behind every economic statistic, there's a human face, a human story. The cost of this collapse is more than economic. It's a cost that's measured in disrupted lives, in dreams deferred, and in the resilience of those who strive to rebuild amidst the ruins. China's collapse serves as a lesson for countries around the world. A cautionary tale that unveils the importance of sustainable economic policies and the perils of a dwindling population. The first lesson we can draw is the significance of sustainable economic policies. China's meteoric rise was built on a foundation of rapid industrialization and investment-driven growth. However, this model proved unsustainable, leading to a ballooning debt and a bubble economy. This underscores the need for balance. Economies should be diverse and resilient, not overly reliant on one sector or one source of growth. It's crucial to remember that while rapid growth can be intoxicating, it must be sustainable. The second lesson is about demographics. China's one-child policy, enforced to control population growth, resulted in a demographic time bomb. With a rapidly aging population and a shrinking workforce, the economy was strained to its limits. This highlights the dangers of drastic population control measures. It's essential to strike a balance between population growth and economic needs. The third lesson is the importance of foresight and adaptability. Economists and policymakers around the world warned of the impending crisis, yet these warnings often fell on deaf ears. This teaches us the importance of vigilance and adaptability. Economies are not static, they are dynamic and constantly evolving. It's crucial to remain adaptable, to anticipate change and adjust policies accordingly. Our fourth and final lesson is about interconnectedness. China's collapse sent shockwaves through the global economy, demonstrating how interconnected our world has become. This reminds us that economic policies cannot be made in isolation. We must consider the global implications of our decisions. These lessons are a stark reminder of the consequences of ignoring warning signs. They serve as a call to action for policymakers and economists worldwide. We must learn from China's collapse and work towards creating more sustainable, balanced, and resilient economies. Otherwise, we risk repeating the same mistakes with potentially catastrophic consequences. Despite the collapse, China is not down for the count. The road to recovery is long, but not impossible. Let's imagine how this can unfold. First off, economic reforms. China has a history of strong central planning, but it might be time for a paradigm shift. Embracing a more market-oriented economy could stimulate innovation, attract foreign investment, and foster economic resilience. This doesn't mean complete laissez-faire, but rather a balanced approach where the government facilitates a conducive environment for businesses to thrive. Next, population policies. The one-child policy has left a significant dent. but China could consider policies that encourage a higher birth rate. This is not a quick fix, but a long-term strategy that could pay off in the future. Incentives for families to have more children, improved childcare facilities, and a stronger focus on work-life balance could all play a part. Then we have international cooperation. China has been a key player in global trade, but the economic collapse has strained relationships. It's now more important than ever for China to foster strong international ties. This could mean more transparent trade practices, embracing multilateral agreements, and working with international bodies to improve economic stability. Of course, these are not foolproof solutions. Economic reforms are complex and can lead to unintended consequences. Population policies are sensitive and require a careful balance of incentives and restrictions. International cooperation requires trust, something that can take years to rebuild. But if China can navigate these challenges, the country could begin to recover from the collapse. It will be a slow process, fraught with difficulties. Yet the Chinese proverb, "A journey of 1,000 miles begins with a single step," seems apt here. China's future remains uncertain, but with the right policies, it can bounce back. The road to recovery is long and arduous, but with determination, resilience, and a bit of luck, China might just find its footing again in the global economy. As we continue to monitor China's situation, it's essential to understand the global implications. Let's delve into the potential worldwide effects of China's recovery or further decline. A China on the mend could be a beacon of hope for the rest of the world. Its recovery could signal the resilience of economies to bounce back from significant setbacks. The revival of the world's second-largest economy could boost global markets, from commodities to technology and manufacturing. We could see a ripple effect of increased confidence and growth, not just in China, but in economies worldwide. On the flip side, continued decline in China could have far-reaching consequences. China's fall would send shockwaves through the global economy, affecting everything from trade balances to currency values. Its status as a major player in international trade means that a downturn could hit hard, causing global supply chains to stutter and stock markets to wobble. Countries can prepare for either scenario. Economies can diversify their trade partners to mitigate risks associated with over-reliance on a single nation. They can also invest in local industries to reduce dependence on foreign supply chains. It's also crucial for countries to strengthen their economic fundamentals, like improving fiscal management, boosting productivity, and promoting innovation. In the face of a declining China, countries can adopt proactive strategies to cushion their economies. They can explore new markets, invest in research and development, and promote economic resilience. It's about being prepared and adaptable, ready to seize opportunities or brace for impact. Whether China recovers or continues to decline, the world must be ready. Economies must be flexible, resilient, and strategic. They must be prepared to navigate the choppy waters of global economic uncertainty, seizing the helm and charting a course for sustainable growth and stability. The world is watching, and the stakes couldn't be higher. The collapse of the Chinese economy and population is a story of missed signs, global repercussions, and uncertain futures. A sobering thought, to say the least, isn't it? We've covered a lot of ground today, diving deep into the unsettling reality of China's economic decline, the seeds of this downturn, and the domino effect that has rippled across our globe. We've examined the human cost, the lives forever altered, and the challenges individuals face in the aftermath of such a seismic shift. We've learned some invaluable lessons from this situation, ones that we can apply to our understanding of global economics and the interconnectedness of our world. We've also taken a look at the potential road to recovery, a path fraught with difficulties, but not without hope. We've seen how this economic collapse has left an indelible mark on the global stage, altering the dynamics of international trade and finance. The impact of this economic and demographic shift reaches far beyond the borders of China, affecting us all in varying degrees. It's a stark reminder of how closely entwined our fates are in this globalized world. So what can we do in the face of such monumental change? It starts with staying informed, with understanding the complexities of global economies and the domino effects that can occur when one falls. It means engaging in conversations, asking questions, and challenging assumptions. And that's where you come in. We encourage you to think about the global implications of such economic shifts. How does this affect your country, your industry, your daily life? These are not easy questions, but they're important ones to ask. Let us know in the comments which country's economy you'd like us to examine next. Don't forget to like this video and subscribe to our channel for more insightful analyses. Until next time, stay curious.